All right, guys. So the second topic is financial considerations. So, effectively, without the appropriate financial systems in place, these businesses are likely to face losses and could potentially fail. Okay, so that is why financial considerations are so important. All right, so the importance of establishing bank accounts. A bank account is an arrangement made with a bank where a business or individual can deposit or withdraw money. I am assuming most of you probably do already have your own bank account, so you should be able to apply that information already. Okay. However, owners should create a bank account separate from their personal account, and most businesses are actually going to be required to do this from the Australian Taxation Office. Okay. Owners need to be taxed independently from their business and will submit their tax returns that way. Right? So if you are a business owner, you are kind of being taxed twice over. So once for yourself and once for your business. All right. Bank accounts will be created and monitored in person, but with changing technology, many businesses are opting to manage their accounts electronically. Business accounts enables owners to track the cash flow within the business. So that's money coming in and going out. All right. The benefits of doing this is that it confirms a business financial transactions, and it saves time for business owners having to separate personal expenses and business expenses. Okay. If you have ever printed off or seen your statement, you'll see that there's all the transactions that you've used in either the last 3 or 6 months. And if a business didn't have a separate account, the owner would be going through trying to work out what they can claim is tax deductible. All right. So why are they important? Number one, it enables a business to separate business and personal spending, which we've already said. It enables a business to properly calculate their bank balance and understand their financial position. And it enables the business to accurately lodge its tax returns. Okay. You don't want to be deducting too much, but you definitely don't want to be under deducting either. All right. The focus when you are going in to actually get a business account is going to be looking at the best interest rate. So the more money you put in, the more money you're going to get back, and the lowest fees. So if you're having to pay to have a bank account, a business bank account, you want to be paying the least amount of money possible. All right. The importance of establishing financial control systems. So financial control systems are the processes and procedures used to direct and monitor a business's finances. These systems are used to prevent fraud and errors from occurring. It will enable the system to be used appropriately and categorized accurately while helping plan out future financial activities. And the business can either run financial control systems themselves, or their employees can run them, or they can actually have an external organization manage this function. All right. So this one, pretty much a non-negotiable if you are working online. But also it is just smart to have a system where it will protect you from anyone hacking in, getting access to your details, your accounts, anything like that. All right. So financial control systems aim to provide a better understanding of cash flow, again, amount coming in and out of the business, make informed financial decisions. So if you are thinking about buying new machinery that is going to increase your level of production, how much money is that actually going to cost? Are you able to afford it? Is it going to be more beneficial in the long run? Things like that. And it can identify and prevent risks that stop a business from achieving business objectives. All right. So we are spending way too much money to this supplier, and we have only picked that up because we have these financial control systems in place. However, they are quite expensive, all right? If they're done externally, you're actually paying another business to do it for you, or you need to train employees to be able to do it accurately, okay? And they are super time consuming. It's something that needs to be addressed pretty much weekly to make sure that everything is being monitored and established and fixed where necessary. All right, so auditing and budgeting. If we look at table 3, the importance of budgeting. So most of you will have at least heard of budgeting, even if you haven't actually done it yet. But budgeting effectively is monitoring your finances and working out what you can do to cut costs. All right, so you're going to try to avoid large financial losses, helping to prevent fraud, avoid financial mismanagement, and avoid slow cash flow. All right. And how they do that is in this table. I would recommend at least dot pointing or summarizing each of these. It's just going to help you in the long run. All right. And the importance of auditing, similar thing. It's just going to be monitoring your actual stock, what you have, how your machines are working, and again, actually looking at avoiding large financial loss, helping to prevent fraud and avoiding financial mismanagement. All right, and an example of this, KPMG, some of you may have heard of it. It is one of the big 4 accounting firms in Australia. It's an accounting organisation which provides tax, audit and advisory services to organisations globally. One of Australia's largest banks, ANZ, has paid KPMG to conduct audits for the business for over 10 years. One role of KPMG at ANZ is to get a comprehensive understanding of business processes and assess whether their practices are providing accurate financial information to its shareholders. All right, and then the last one, the importance of establishing record-keeping strategies. These methods used to keep track of financial transactions of a business over a period of time. Small businesses often use cash books, manual or electronic books where all cash transactions within a business are recorded, as it is the simplest form of record keeping. Okay, so looking at cash books, it's just going to show you where your money is coming in and where it's going out. All right. ATO requires businesses to keep written records of transactions for 5 years. If there's no proof of a transaction occurring, a business may face legal consequences. Okay, so if you claim that you drove 10,000 kilometers, but you have no evidence of that, and when I say 10,000 kilometers, I mean 10,000 kilometers for the business, and you're wanting your petrol to be covered. If you cannot prove that you did drive 10,000 kilometers or that it wasn't for business purposes, you can, 1, be forced to pay back all that money, 2, you can be fined additionally, and 3, again, you can actually face prison time. All right. Can be time consuming and subject to human error if the cash transactions aren't recording correctly. Okay, so that's why often businesses do look more towards electronic books now. Okay, all right. So why is it important? So record keeping strategies enables a business to accurately keep track of financial transactions. It enables a business to prove financial transactions that need to be reporting when lodging tax returns, enables a business to conduct valid audits, and enables a business to form accurate business reports. Now, remember, with business reports, these pretty much go to shareholders, okay? So if you're a private company, remember that you can only have up to 50 shareholders, but if you are a public, that needs to be made available pretty much to the public, okay? Because you could have thousands of people that do have shares in your business, all right? And then cash books keep a daily log of cash flow and the type of transaction associated with it. So whether that was paid in cash, on credit card, on FPOS, checkbook, yeah, creates a process for accurately recording financial transactions that are independently assessed and tested, and it accurately records financial transactions which are then used to create financial statements or a business report. Okay. And an example of this one is MYOB. So Mind Your Own Business is a company that provides accounting, tax, bookkeeping, and other service software for businesses. It is used mainly by small to medium-sized businesses. MYOB can be used by businesses who aim to keep an online record book of all financial transactions. And as we said in the last slide or the slide before, that is becoming increasingly popular because it is more accurate, more time effective. Their bookkeeping services help owners to manage daily business finances and provide awareness of the business's financial state. All right, so that is where you would externally get a business to monitor this